we're hearing about risks now from too much stimulus. Do you think that could be what trips up this market rally that we've been seeing?
I don't think so. Obviously there's a wartime act being used by the president to get the vaccine produced, and I think there's a bit of an analogy there to what's going on in the market. There's a war going on between the earnings picture, which is improving rapidly, and the bond yield story, which is a concern about inflation. Adding a little bit of salt to that, if you like, is the comments from the Chinese regulator yesterday talking about bubbles. And we also had a regulator here in Australia and also the Treasurer mentioning, look, we've got to keep an eye on financial stability. So I think that's all a little bit premature. I think the war between earnings, if you like, and bond yields and stability will continue to rage, and there'll be battles won and lost on both sides. But I think at the moment, particularly with this news around the vaccine rollout in the US, the earnings picture is going to win, hence the green across the screens today, Matt.
All right, you prefer equities over bonds, but are bonds starting to look attractive as those yields creep up?
Yeah, they'd probably have to go a bit higher. I mean, most investors have taken duration out of their portfolio, which means they've gone either very short-dated bonds or even floating rate bonds. In Aussie investor portfolios, mostly floating rate bonds. The question, when do you start putting duration back into portfolios? I think we're probably talking north of 2% US Treasuries and probably 2.5% Aussie Treasuries, which is kind of where the longer-term inflation targets of the central banks are. I think that's the point where you start thinking about adding some duration to the portfolio. I mean, it got a little bit tempting in the big sell-off we had last week, Matt, to maybe trade some duration. But I think in terms of positioning portfolios for the medium to longer term, I don't think 1.5% or 1.4% US bonds and 1.7% Aussie bonds are quite where we need them to be before we'd start to get interested.